The Pi Network is a new cryptocurrency project that has been making waves in the digital currency world. Unlike traditional cryptocurrencies like Bitcoin and Ethereum, which require significant computational power and energy consumption to mine, Pi Network aims to democratize the mining process. It aims to make mining cryptocurrency accessible to everyone, regardless of their technical expertise or financial resources. By simply using a smartphone, anyone can participate in the network and start earning Pi coins. Users can mine Pi coins on their smartphones through a user-friendly app. This app not only allows users to mine Pi, but also to interact with the community, learn about cryptocurrency, and stay updated with the latest developments in the Pi network. The project gained popularity quickly, attracting millions of users from around the globe. Its unique approach to mining and its promise of a more inclusive cryptocurrency ecosystem resonated with many. Millions of people joined the network, creating a vibrant and diverse community. This rapid growth has been one of the key factors in Pi Network's success so far. Recently, Pi Network experienced price fluctuations, which is not uncommon in the volatile world of cryptocurrencies. These fluctuations have led to a mix of excitement and concern among its users. This created uncertainty among its users, as they watched the value of their mined Pi coins rise and fall. Some users are optimistic, believing that these fluctuations are temporary and that the value will stabilize over time. Some analysts believe the price could crash, citing various factors such as market saturation, regulatory challenges, and competition from other cryptocurrencies. They argue that the current hype may not be sustainable in the long run. This is due to negative market sentiment and technical indicators that suggest a bearish trend. These indicators include declining trading volumes, increasing sell orders, and other signs of weakening market confidence. The situation is causing concern among investors, who are wary of potential losses. Many are closely monitoring the market, trying to decide whether to hold on to their Pi coins or sell them before the value drops further. It's important to understand the factors at play, including market dynamics, investor behavior, and external influences such as regulatory changes and technological advancements. This essay will analyze the reasons behind the recent price drop, providing a comprehensive overview of the current state of the Pi network and its future prospects. We will examine both bearish and bullish perspectives, considering the arguments and evidence presented by experts on both sides of the debate. We will also discuss expert opinions and real-world impacts, exploring how the Pi network is influencing the broader cryptocurrency landscape and what it means for the future of digital currencies. On March 17, 2025, the price of Pi coin dropped significantly. This sudden drop caught many investors off guard, as the cryptocurrency had been showing a steady upward trend in the weeks leading up to this date. The market was buzzing with speculation about the reasons behind this unexpected decline. It fell by 8% to reach $1.35. This sharp decline was a stark contrast to the optimism that had been building among Pi coin holders. Many had hoped that the coin would continue its upward trajectory, but the sudden drop shattered those expectations. This erased all the gains made during the week. Investors who had seen their portfolios grow were now facing losses, and the mood in the market shifted from excitement to concern. The rapid change in fortune left many wondering what had gone wrong. It was a 20% decrease from its peak of $1.70. Just a few days earlier, Pi coin had been riding high, reaching new heights and attracting new investors. The drop to $1.35 was a harsh reminder of the volatility inherent in the cryptocurrency market. As of March 14, 2025, the price was holding at $1.67. This stability had given investors confidence, leading many to believe that the coin was on a solid upward path. The sudden drop just 3 days later was a shock to the system. This is just above the support level of $1.64. Analysts had identified this support level as a critical point for Pi coin, and the price holding above it was seen as a positive sign. However, the drop below this level raised concerns about the coin's future stability. However, analysts predict a further drop. They have been closely monitoring the market trends and believe that the current downward momentum could continue. Various factors, including market sentiment and external economic conditions, are contributing to this pessimistic outlook. They believe the price could reach $1.20 before any uptrend. This projection has caused anxiety among investors, many of whom are now considering whether to hold on to their coins or cut their losses. The uncertainty is palpable, and the market is on edge. This downward trend has worried many Pi network users. The community, which had been growing steadily, is now facing a crisis of confidence. Social media platforms are filled with discussions and debates about the future of Pi coin, with opinions ranging from cautious optimism to outright panic. Some fear losing their investments. The fear of further losses is driving some investors to sell their holdings, exacerbating the downward pressure on the price. The emotional toll of seeing hard-earned money evaporate is taking its toll on many. Others are hopeful for a price recovery. They believe that the current dip is a temporary setback and that Pi coin will bounce back stronger. These optimistic investors are looking at the long-term potential of the coin and are using the current low prices as an opportunity to buy more. The future of Pi network remains uncertain. While some see this as a moment of crisis, others view it as a test of resilience. The coming weeks will be crucial in determining whether Pi coin can recover and regain the trust of its community. One reason for the price drop is the recent token unlock. A large number of Pi coins were released into the market. This created a surplus of coins available for trading. The token unlock amounted to 129 million Pi coins. This was worth approximately $175 million. This sudden influx of coins increased the selling pressure. More people were selling than buying. As a result, the price of Pi dropped. This is a common phenomenon in the cryptocurrency market. Large token unlocks can lead to temporary price dips. Another factor contributing to the price drop is the delay in Binance listing. Binance is the largest cryptocurrency exchange in the world. A listing on Binance would bring Pi network significant legitimacy and exposure. Many investors were anticipating a Binance listing announcement on Pi Day, March 14, 2025. However, no such announcement was made. This disappointment led to a decrease in investor confidence. The delay fueled uncertainty about Pi network's future. Some investors interpreted it as a lack of progress. This contributed to the negative market sentiment surrounding Pi. Section 5. Mainnet Migration Deadline. The Mainnet migration deadline also played a role in the price drop. As the deadline approached, many investors grew increasingly anxious about the future of their investments. The uncertainty surrounding the migration process led to a lack of confidence in the market, causing some to sell off their holdings prematurely. Pi network set a deadline for users to complete their KYC, or Know Your Customer, verification, and migrate to the mainnet. This process was crucial for ensuring the security and legitimacy of the network. However, it also added a layer of complexity for users who were not familiar with such procedures. The deadline was March 14, 2025. This date was chosen to give users ample time to complete the necessary steps, but it also created a sense of urgency. Many users found themselves scrambling to meet the deadline, leading to a flurry of activity in the days leading up to it. Investors who failed to complete the process risked losing most of their Pi balance. This potential loss was a significant concern for many, as it represented a substantial portion of their investment. The fear of losing their hard-earned Pi drove many to take action, but not all were successful in completing the process in time. They would only retain the Pi mined in the 6 months before the migration. This stipulation was put in place to encourage timely compliance, but it also meant that those who missed the deadline faced a considerable financial setback. The loss of Pi beyond the 6-month window was a harsh penalty for those who were unable to navigate the KYC process. This deadline created pressure and uncertainty among Pi network users. The looming deadline and the potential consequences of missing it led to widespread anxiety. Users were not only concerned about their investments but also about the technical challenges of completing the KYC process. Some users may have sold their Pi holdings to avoid potential losses. The fear of losing their Pi balance prompted some to liquidate their holdings before the deadline. This preemptive selling added to the market volatility, as more Pi was put up for sale, driving prices down further. This could have contributed to the selling pressure and price decline. The combination of uncertainty, fear, and the rush to meet the deadline created a perfect storm that negatively impacted the Pi network's market value. As the deadline passed, the market began to stabilize, but the effects of the migration deadline were felt for some time. Section 6. Technical indicators. Technical indicators also point towards a bearish trend for Pi network. The MACD, or moving average convergence divergence, is approaching a bearish crossover. This suggests that further price drops are likely. Additionally, the funding rate in the futures market is negative. This indicates that more traders are opening short positions. In other words, they are betting on the price of Pi to decline further. These technical indicators, combined with the other factors discussed, paint a bleak picture for Pi network in the short term. However, it's important to remember that technical analysis is not always accurate. Section 7. Pi network developments. Despite the price drop, Pi network continues to develop its platform. One recent development is the launch of Pi domains. Users can now bid on Pi domain names. The auction for Pi domains runs from March 14th to June 28, 2025. This development aims to create a more robust ecosystem within the Pi network. However, the launch of Pi domains has received mixed reactions from the community. Some users are excited about the potential of owning a Pi domain. Others have expressed concerns about the closed nature of the network. Section 8. Community concerns and positive developments. One of the main concerns within the Pi network community is the closed network. The Pi domains, for example, only function within the Pi network. This raises questions about governance, security, access, and legal oversight. Some users worry that the closed network could hinder Pi network's growth and adoption. They believe that a more open and decentralized approach would be more beneficial. On a positive note, Pi network is witnessing growing adoption in China. Businesses like retailers, restaurants, and service providers are starting to accept Pi as payment. Section 9. Conclusion. The future of Pi network remains uncertain. The recent price drop has raised concerns among investors. Factors contributing to the decline include token unlock, Binance listing delay, Mainnet migration deadline, and bearish technical indicators. However, Pi network continues to develop its platform. The launch of Pi domains is a step towards building a more comprehensive ecosystem. The growing adoption in China is also a positive sign. It remains to be seen whether Pi network can overcome its challenges and fulfill its potential. Investors should proceed with caution and conduct thorough research before making any investment decisions.